took the entry, and we just never came back. Just look at this. Just look at this. Just beautiful, right? Just beautiful. 1:16, guys. 1:16. Just think about it. Crazy stuff, right? Crazy stuff. Like, it blows my mind every time I see it. Crazy stuff. Hey guys, welcome to a new video of this channel, and in today's video we're gonna talk about a move that EurUsd today, euro dollar today had, and how it moved and what happened exactly, how I got the move and so on. So basically we're gonna discuss, and I'm gonna show you the setup, how I marked it up and how it moved, etc. Now before I begin, I must give this disclaimer that Forex trading contains risk of real money and that past results do not guarantee any future results. So read the disclaimer, Google it, and basically that's pretty much it. Now let's begin and see what exactly happened. Now this was a setup today, and this is the move. It's 1:10. 1:10 risk reward, which is crazy, right? Crazy stuff, amazing stuff. So before that, I just wanna what's sad about this setup is that I missed the first entry, like, and it's kind of sad because I was really hoping this is gonna work out, and it did, but it's just sad because it just missed it by probably 0.4 pips, just 0.4 pips, which is crazy. Literally 0.4 pips. That's how the trade missed. That's how much by the trade maps missed for me. Anyhow, I'm gonna go through this setup completely. Before I do so, let me remove all this. Just a second. Yeah, let me remove all this. Yeah, and I'm just gonna put it here. Okay. Now, before I begin, I just want to say I just want to use this. Yeah, let me just use this. So I got this set up. So when I saw the market, it was around here. Okay, when I saw the market, it was around here today in the morning. Probably around London, beginning of London. So I saw the market around here. So what I saw, basically, I was looking at the daily chart first, and what you can see at the daily chart is that we reacted off this candlestick. Now guys, before you understand this, you must understand how the smart money concepts work. If you don't know, just contact me on Telegram and I'm gonna help you out, okay? But this is completely price action based institutional trading smart money strategy, so you must understand that, because that's the key to understanding how the market moves. And believe me or not, this is how the market moves, okay? This is how the market moves, so you must understand that. And this is a key factor of success in trading. I believe so personally. I'm not the most successful trader in the world, I won't say that, but I think this is the way you can be. Probably you can be even better than me at trading, because it's more psychology than actually skill set. However, the skill set's important as well, because the edge is important. My edge is risk reward and these concepts, because these concepts are so good. These concepts are so damn good because it got no indicators, nothing, and it's just pure price action, and you can understand what the banks and the hedge funds and the big market move makers are doing. So that's pretty much it. You must understand that to understand what I'm going to show you now. So what exactly happened? I went to the daily and I was looking at this, okay? I was looking at this. No, I'm sorry. Before that, I had this marked up from last week. Basically, from last week, I knew that the market and the weekly was bullish, okay? You can see it's bullish. It's creating higher highs, right? Higher lows, higher highs. Now we're expecting it to create more higher highs because it's bullish. You can see that it's bullish, right? It's completely bullish. Now, what I was hoping for in the daily was the same thing. Basically, I was hoping for, as it reacted of this one. Like, look at this, for example, okay? So we know it's it's basically bullish on the weekly. Let's write it down, okay? Weekly bullish, all right? So when we know that the weekly is bullish, so as we know the weekly is bullish. Now, this is from last week, okay? So this is from last week, not this week. So I was marking it up, and I saw that the market reacted off this candlestick, okay? Reacted off this candlestick, which was the breaker here, or institutional candlestick, whatever you want to call it, and then it reacted perfectly, and as as per market structure, we should be expecting a higher high, right? As per market structure, as think about it, the weekly is bullish, right? So in the daily, this is just a daily retracement to a weekly level, so that it can go and create a new higher high. And that's exactly what's happening. Look at this. Look at this. Weekly level, and then daily retracement, so I can get to another weekly level, which is this one. Here there is a lot of orders in here. Again, guys, you have to understand the smart money concepts to understand this. However, if you do, that's amazing. And if you don't, contact me on Telegram or visit my website. I have my Telegram there, and just I'll help you out. Anyhow, so this is it. Okay, so this is a daily level, key weekly level, and it's really interesting. And what happened is the market reacted perfectly over here, and in fact it reacted again. It did not create a straight higher high, it reacted again. And if we look at it, we also had liquidity taken down here, right? Liquidity taken down here, beautiful price action. The only thing that misses out is this one, or probably this one, but still it's pretty much balanced out. So the thing we are looking at is basically this, and this has been balanced out as well right now, right? So this is the daily that we're looking at. And now next, what's happening is the market moves on to and then I move on to 4 hour, basically, because we know the daily is bullish and the weekly is bullish. We are expecting a higher high here. Why? Because it's reacting of the daily level. So we're expecting something like this, basically, you know, something like this for a new higher high. All right, so right now the market is here, and then we head on to the daily level. Daily is bullish as well. So look at this, we got both bullish, right? And next what I have is basically this, the 4 hour level. So basically this is how the market reacted. Beautiful, every price action beautiful. We are bullish, completely bullish. This is just liquidity capture. Market came back to this candlestick. Okay, same thing, look at this, same thing, came back to this area basically, and it's now we're expecting a higher high. And as we're expecting a higher high, I will go down to the 1 hour, okay, because I want to day trade, I want to intraday trade. And what I do is next I look at this. Now over here I marked everything up that I saw, okay, almost everything up that I saw. At first I saw this is a logical area for a reaction, so I have to check this area out just in case when the market arrives here. I need to be I need to look out for the area just in case it want to go down. Okay, now next what I started looking for is liquidity. So this was beautiful liquidity. Let me just here. So this was money in over here, right? And I also saw liquidity down here. So that means the market might come back, even though it's bullish, might come back to take them out right now. Okay, might. It's not necessary, but it might come back, and that's probably afterwards it will, and it might first go up and then come back, or it might come down and take them out and go up. Like suppose it can do this, it can do something like this, okay, or it can just go and do this, okay, but eventually it's gonna take them out. This is what keeps happening. Okay, now what next I did is basically I looked at this. Look at this. This was a liquidity capture. Now by this it's tough for you to understand, but if I go to the 15 minutes, you can see it's a beautiful liquidity capture, right? Sorry, my bad. Yeah, it's a beautiful liquidity capture, right? Very nice. Over on this candlestick, double bottom, bang, liquidity capture, right? Beautiful. And we mark this up as captured bottom. So what happened is I saw liquidity captured there, and what was next is basically I was looking at this. Let me show you on the daily, or was it weekly? Oh, it was daily. Yeah, so what we're looking at is on the daily as well, same thing again. You see these equal highs, this and this. I marked them up as the target. Okay, I marked them up as the target. Just a second, guys. Yeah, so I marked them up as the target, and what happened is basically let me just mark it up. Right, yeah, let's do that. Okay, so this was my target for the day. Okay, I'm expecting, even though I'm expecting, I'm basically, as I said, I'm expecting a higher high above this, right? So it should be the market should be closing above this, okay? And that's our target. Basically, that's a target. Now, how did we get the setup that we're looking for? We go to one hour and we found this, right? We found this area, this key area where the orders are. We found the captured liquidity over here, and what we're expecting is basically the market to come to these areas basically. So before what I did, I marked up these two areas, this one, okay, and this one over here. So these are the areas I was looking at for the market to react to. And now this one I did not mark it up because it's way too down for a single day to come, and like I did not think it will come, because even if it does, I would look at the price action then, you know. But I was not focusing on this one because it's I don't think it will work in a single day. It would take some 2 or 3 days. So it was an intraday trade, and I was focusing on that for now. So what I was looking at is basically something like this, or something like maybe this, right? So what happened next is basically, you can see it was just beautiful. Now, before this happened, I started breaking them down, because why? I needed a better entry. If I took the trade here and placed the stop loss above here, it's 15 pips stop loss, and the target is around 1:4.74. okay, target is a little above the liquidity, because that's what I do. So let's say 1:5. Now that's a good target, I won't lie, that's nice. However, I tried to break it down even more to get a better entry, okay? So at first I saw this bit, which is this imbalance down here within the institutional candlesticks, okay? So if we look at, say, the 2 hour, and we can see that there is a beautiful institutional candlestick, and above that a beautiful imbalance, right? So we were looking at that, and then I broke down it even more, okay? I started going down even more. I looked at this imbalance. I looked at I exactly don't remember, but I think the whole thing, yeah, the whole thing basically. So I was marking up this imbalance, and in the end I marked it up around with 9 pips of stop loss. Yeah, exactly around this area, okay? I marked it up exactly below this. Yeah, beautiful. So what happened, I placed a buy limit over here. Exactly around this area, exactly at 1.20, and what's sad is it missed, guys. It missed by 0.4 pips. However, let's just look at it, okay? And what the price was, this was probably 818, yeah, as far as I remember. Yeah, so you can see 9 pips stop loss, and the reward is the same, right? And we can have now a 1:9, because as you know, I like to put it a little above the liquidity, so it's 1:9. So if you risked $100 in this trade, you would earn $900 profit. Let's say $10 equals $90 profit. $1,000 equals $9,000 profit. Now that's the key to risk reward, guys. That is the key to risk reward. I cannot stress this enough. That is the key to risk reward. Look at this. Just look at this. It's so beautiful, right? Now what's sad is it missed. Like, it actually missed. Let me show you guys what exactly happened. Now the market started moving. I was looking at it. It's the London, New York. Started moving. Beautiful. Bang, bang. And I'm still focusing on it. I'm looking at it. I have my alert set up down here, around here, and it's moving. I'm still waiting, and look at this. Yeah, I'm sorry, I moved a bit too fast. Now before I start, I just want to go to the 15 minutes. Yeah, and what happened next is basically, this was my entry, right? The market started moving, and look at this. Look at the reaction. It moved from 1.20912. Like, it's just crazy, man. We missed it by just a bit, Yeah, 1.20912. That's the price it went to, and ours was 0.4 pips. Like, it literally missed the entry, the buy limit, because of 0.4 pips. Okay, but the good thing is I was still looking at the market, right? So what I did was I waited patiently for the market to come back here, okay? And if it does not, I'm gonna take it in a different way. Now let's just log this one. Yeah, so this one we missed, okay? It did not come back. If you look at it, it did not come back, okay? It never came back. It just flew away. The entry was just majestic. It was crazy. Now as the market was here, what I did, I went down to the 1 minute, okay? And what I did in the 1 minute is basically I looked at this one. I was waiting for the price action. I started waiting and started waiting for it to move, okay? And start moving like this. Let me just slow it down a little bit. Yeah, or a little more. Yeah, okay. So the price moves. The price is moving. The price is moving. You can see the price is moving. I was completely focused. I was looking at constantly at 5 minutes, 3 minutes, and 1 minute, okay, constantly, because I missed the entry, and the entry was so beautiful. If you look at it, this 1 minute price action shows the exact same thing, like liquidity capture, new higher high, movement, new higher high, same thing, literally the same thing. Market is fractal. It moves the same way in every way, everywhere, okay? It moves the same way. Now this is what was happening, and I saw the reaction in the 5 minute. It's beautiful, right? It reacted off the key area, not our entry, but still the key area, right? Our entry was even deeper in the key area. Now it reacted off the key area. I was looking at 5 minutes and 3 minutes. Now I found this institutional candlestick on the 3 minutes and also on the 1 minute, okay? Also on the 1 minute. So I started looking at it. I started looking at it like this. Started looking at it, and I marked it up, and I started waiting. I patiently waited. What I did, I placed a limit just above this on the entry and with a 4 pip stop loss. And my target remained the same. Remember, my target remained the same, okay? Now, if I just draw the target just a second, my target was this time same thing, right? Yeah. So my target is basically 1:16 for this time. 1:16. So if you took this trade, my plan was to take both actually. My plan was to first take the entry and then wait for the reaction and enter again, okay? So what I did, this time I took, when I take lower time frame entries, I reduced the risk. So I reduced the risk by 1%. So where I was taking around 2.5%, so I did 1.5% instead, okay? And what 1.5%, and I took this. So I eventually made the same amount of money, but look at this movement. Just look at this entry. Like, it's basically the same thing. If you think about it, it's basically the same thing. Liquidity capture, market moves, higher highs, everything. We have everything. We have the target. We have the trading range. This was the trading range. Everything else is balanced out. We have the fibs. If you look at the fibs, we have beautiful fibs, right? 88, 70 to 70, 88 level. Captured liquidity, imbalance, just over here, imbalance, beautiful. Institutional candlestick, breaker, whatever you want to call it. Target liquidity at the above daily equal highs. Literally, we got every single confirmation over here, right? Every single break of structure, we got everything. Took the entry, and we just never came back. Just look at this. Just beautiful, right? Just beautiful. 1:16, guys. 1:16. Just think about it. Crazy stuff, right? Crazy stuff. Like, it blows my mind every time I see it. Crazy stuff. Just look at this, guys. Crazy stuff, right? Now, if we got this, it would have been even more beautiful because we would have been catching both, but it's still crazy, right? It's still crazy. Now, 1:16, you could have made for $10, $160, for $100, $1,600, and for the $16,000. That would have been the profit, and it just took a single day, like in a few hours, in just 16 hours, your target was hit. Crazy stuff, isn't it? Just crazy stuff. Like, it's beyond just. Every time I think about it, and guys, guys, to understand this, if you don't understand this, I can't help you, and you gotta catch me on Telegram or catch me on my website. But if you don't understand this, like, this is just crazy stuff, and it's pure price action trading. There is no indicators or bullshit involved. It's complete price action trading, complete. So that's pretty much it for this video, guys. I hope you enjoyed it. I'm gonna try and solve more videos for you guys and see what I can do. I'm gonna come up with more psychology videos as well, and do follow me on Instagram, Twitter, because I post a lot of charts on Twitter. If you guys don't know, I post a lot of charts on Twitter, and Instagram because I post a lot of psychology on Instagram. So do follow me there, and